Yeah.
Okay. Hi everybody and welcome. I'm Terry Ryder, founder of hotspotting.com.au, and today I'm speaking to one of Australia's leading advice agents, Kate Hill of Adviseable. And our topic is which locations will rise as we move into recovery. And it's a very timely topic because it's occurring in a week in which the various states and territories are announcing their decisions on the easing of restrictions, allowing more and more businesses like cafes and restaurants to reopen, and allowing more and more Australians to go back to work. And we're also seeing the states and territories one by one allowing the real estate industry to return to some kind of normal, with a return to open houses, live auctions, and increased activity at display villages. In the background, we have lots of solid data coming out of the real estate industry, including strong price levels in most locations, with very little evidence to date of price decline, and a significant uplift in the number of searches for properties to buy in the online platforms like realestate.com.au and Domain. So against that backdrop of improving fortunes, generally speaking, Kate Hill and I will be discussing which locations are best placed to emerge from the virus crisis with good prospects for growth. We'll be talking about the factors to look for in a location that is well positioned to not only survive but thrive as we move forward from the shutdown phase. We will discuss some case studies of locations we think will do well in the current circumstances. And we invite your participation. We welcome your comments and questions, which you can provide by typing your thoughts into the chat box. And if you'd like to ask a question live, you can put your hand up by clicking the put your hand up button in the chat box, and we can unmute you and have a chat about your most pressing issue. Now, a key factor in all this is the impression given by news media of impending doom is actually quite different to the reality at the coalface of the real estate industry. And one of the people who's there at the coalface of residential property every day is Kate Hill from Adviseable. So Kate, welcome. How's life on the streets?
Life on the street is, yes, it's interesting. And hello, everybody out there. I hope everyone is safe and well. That's kind of the most important thing. Yeah, as I know you've talked about before, we've all talked about, we are navigating new territory, but to a large extent, I guess the vibe out there, if I can put it like that, is very much that a pause button has been hit in many ways. It's business as usual, but perhaps just on a more reduced level, which we can go into a little bit more as we go through our case studies and perhaps just talk a bit more. So it's as I say, business as usual on one level, but perhaps on a slightly reduced level, but still business as usual. Yeah, not doom and gloom, that's for sure.
There seems to be a kind of a balancing out. There are fewer buyers out there, certainly fewer tie kickers, and the buyers that are out there would tend to be more genuine ones, but there's also fewer sellers, and that has had the impact of kind of balancing supply and demand to a degree, so that I think that's one of the key factors in why prices are staying at pretty solid levels to this point.
Absolutely. So we've talked amongst ourselves about exactly that there are fewer listings, very much so. I think the primary impact over the past few weeks has been on listing volumes, which are definitely down. Some statistics are saying they're down about 30% on last year. So transaction volumes are definitely declining, but the values in most solid kind of areas that we sort of talk about are very much holding steady at the moment. Yeah.
Okay.
Yeah.
All right. So there's lots of background issues to all of that, and we'll touch on as you work through your presentation, and you and I will toss back and forth as we discuss the various visuals that you put on screen, including some case studies. So let's get into it.
Yes, love. So just the usual slightly boring but essential disclaimer that this information here, everyone, is very much general in nature. It's not personal financial advice, and please do give us a call or send us an email if you need to discuss your personal situation in any way. So we are, as Terry has said, we are Adviseable. We are independent property investment advisors. We all have the QPIA qualification. We're buyers agents, we're development consultants. And our mission always is to buy you personally the best available property in the best available area, but very much in a personalized approach and a client first approach. And we do not sell real estate. More on that, because I'm being approached like every day, being inundated with calls from people trying to get me to sell you stuff. So we've all been working in the property investment industry for many years. Our main focus during that time has been Victoria, Queensland, South Australia, New South Wales. Perth is always, we'll talk a little bit more about Perth later. It's been waiting in the wings for a couple of years now, but the key takeaway point there is very much that we are licensed in multiple states. We are members of the Property Investment Professionals of Australia, the Real Estate Buyers Agents Association, and the Real Estate Institute of New South Wales. And as I've said, all equally important for us is that we work very much from a client-first approach. We don't have a stock list of properties that we're selling and it's first come, first serve. We tailor and customize the service to what everybody needs, what you need. So then we assess the area and then we buy the property. So that's kind of a little bit about our process. Terry and I, as Terry says, we do a bit of back and forth here. I think this is an interesting point. While we do say a lot that Australia is not one property market, it isn't. There are most of the time many different areas doing different things at different times for different reasons. However, I think at the moment, again, unprecedented circumstances. So while there are still slight regional variances, I would say that on the whole, we are on hold a lot of the time. So we came into this pandemic, I think, with a very strong economy, strong fundamentals. There was a lot of infrastructure spending going on, population growth. So, and I think across the board, which was very unusual before all this hit, we had growth in, and I've said this a bit further down, so I'm a bit ahead of myself here. We've seen some capital growth in every region, city and territory across the country, Terry, did we not? I'm quoting you actually, as always.
Certainly in the March quarter, every one of the capital cities and all of the 7 regional market jurisdictions across Australia recorded some growth in their prices, both compared to the previous quarter and over 12 months. So as we came into the shutdown period, most markets in the country were rising to some degree, and some were rising strongly.
Yes.
And I think what is one of the important factors is it was very much driven by owner-occupiers, I think, not so much by investors this time. The previous Sydney Melbourne boom was investor-driven to a certain degree, but not this one.
Investors, I think, were just sort of starting to sniff around again because APRA, had relaxed some of those standards. The banks were lending again to a degree. There were still restrictions and it was still tricky, but there was that sign the investors were definitely coming back. But I totally agree. Our main competition, if you like, when we were offering, or are, and to a degree still, but when we were offering on properties, was the owner-occupied market. Yeah, which is a good thing, really, because then you think, especially when you're assessing an area, that that you're in the right, that you're doing the right thing, because owner-occupiers are essentially what are going to drive up your values in an intrinsic way. It's not sort of false investors coming in there driving prices. Yeah.
So it's kind of an unusual situation because you and I constantly emphasize that we don't have just one market, and there's often different scenarios playing out around the country. That was still the case. There were still markets, individual markets that were falling and some were stagnating, but the general theme across the nation coming into this was strong rising with very low vacancy rates and very few properties on the market. There are even fewer now, but listings were down, vacancies were down. The level of construction of new dwellings were down. So we had impetus for prices to rise because supply was low.
Yes. And I think as we, again, we'll keep coming back to this as we navigate through this and then come out the other side, I think there will be I would anticipate, I don't want, I was going to say quite an exceptional bounce back. I don't want to get quoted on that in 6 months' time. Somebody will say, you said. But I really do think that there will be quite the bounce back. Let's keep it, you know, nice and vague like that, because we'll be coming into spring. Really, the economy will be kind of getting back to work fully. And I think investors definitely will be flocking to that perceived safe haven of property, you know, and people will want to be getting back to normal, you know, with what's happened to the share market, even though that again has recovered or is recovering remarkably well, even in the US. So I think that to me, if anything, it's a case. By now, you know, now there really are fabulous opportunities out there. You know, you're going to get to that happening in spring, and you're going to regret not doing it now. You know, in terms of when you think about price data lagging behind actual market trends, it'll be, you'll have missed the opportunity to secure a really good deal. So, but as we know, the media are full of doom and gloom and drama headlines. They don't want to report good news. They don't want to report, like you said earlier, Terry, you know, when you and I were talking about the resources, the good news that's out there. They just, you know, they want dramatic headlines. You know, they will report that somebody out there has predicted a 30% drop in house prices. We're not seeing anything along those lines at the moment.
That's not going to happen that way, of course. But, I mean, because of the research that we do every day, we know what everybody is forecasting. And we know that it's only the people who forecast the dramatic falls are getting the big headlines, and the ones who, the vast majority, are predicting far more moderate outcomes, are just not getting airplane media, because media doesn't deal in positives, unfortunately.
And I think, you know, if I called the media and said, hey, you know, things are holding pretty steady, there's no drama, you know, there's this and this happening, they'd be like, yeah, okay, and they'd be moving on to the person who's going, I think it's going to drop by 30%. Ooh, you know, dramatic headline, clickbait. So that is, I think people really need to be aware that those that are curating the news, what their agenda is, really.
You know? Well, you mentioned clickbait. It's very important for people to understand that it's about clickbait, and media these days are willing to have a headline which is an absolute blatant lie, not just an embellishment or a slight beat up, but a blatant lie to get you to click on something. And then you click through to the article and find, well, hang on a minute, the headline said this, but actually the content of the article is quite different. There's actually some stark examples of that today. I saw a headline today which said, China bans Australian meat exports. And I thought, my God, that's serious. That's a big escalation in the standoff. When in actual fact, when you click on it, that's not what the story had at all. They've actually been expressing some concerns about a small number of specific abattoirs in Australia. It's part of the political back and forth at the moment, but the inference in the headline was that they completely banned Australian meat exports. And simply, when you click to the article, that wasn't the case. There was another one that that suggested that a particular area of Australia was going to get $450 million in bushfire recovery funds. That's what the headline stated, but when you click through it, you found out the local area is going to get a share of a total of $450 million across the country. So again, very misleading to the point of being blatantly dishonest, and that's happening time after time, day after day, every day.
Yes, and I think then across the board, you know, but obviously we're here to talk about property. So, you know, for us, you know, I mean, as you say, not a day goes by where you go, what are they saying? It's just not true. But really, everyone out there, please understand that there is an agenda there. They're really not reporting, like Terry says, it's not fact. They're just trying to get you to click on you know, on their dramatic headlines. So at the end of the day, our property markets are hugely resilient, and as I said earlier, we're coming at this from a very, very strong position. Things were poised, really. All those really good markets, established strong markets that we always buy in, were all without fail doing, you know, just nicely when I say nicely plodding along, some of them poised for, you know, there was revival, there was momentum. Every single one of them was on an upward trajectory, everyone. So, I guess I wanted to just point out that CoreLogic data, who I know love to track the property market data on a daily basis, which is quite frankly ridiculous. But the end of April data shows that combined capital city market index showing a positive 4% value increase. Now that is obviously, you know, the combined, having just said Australia's no one property market, but there are some ups, there are a few downs, but on the whole, it's not a 30% drop across the board.
Their figures for April, Kate, were 6 of the 8 capital cities showed some level of rise, and 6 of the 7 regional markets also rose to some degree or other during April. So the vast majority of markets still up a little bit, not much, but I would have thought that any level of increase in the current circumstances was remarkable.
Absolutely, absolutely. And again, is not that you won't see that headline. You will not see that headline that things are not crashing. So let's just reinforce that point. Yes, and just my last point there, as you just said, all 8 capital cities, all 7 of the states and territory regional markets recorded some price growth in the March quarter. What have I got next? Yes, so I've heard all sorts of horror stories in the past few weeks, people being called by unscrupulous agents, marketers. I myself am being approached on a daily basis by people, marketers, off the plan property, to sell their wares. And I keep writing politely back and go, no, sorry, we don't do that. So I would just like everyone to be aware, as I always say, but at times like this, when people start to get desperate, there are fewer buyers out there, they will start to get pushy, and they will start to pay more and more incentives to the people who will sell their stock. And just be aware of that. You need to always ask who's getting paid, who buy, and how much. So yeah, and I'm mentioning this now just because I've noticed this marked increase in approaches to me over the past 2 or 3 weeks, definitely. So putting that out there, everyone beware. What else have we got? So, okay, we're getting into, how are we doing? Getting into our post-pandemic opportunities. I'll say now, the top picks haven't changed massively from areas we generally talk about, because those markets that we buy in are consistent performers. We buy in those areas for a reason, and that is because they weather storms like this, and they have good, strong fundamentals in industries, diverse industries, etc., etc. So first one we're featuring is Bendigo. Love, 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 love this area, where pre-COVID was strong. We know that the Victorian markets were all performing really well over the past couple of years. Both Ballarat and Bendigo. But Bendigo was a little bit behind Ballarat in terms of capital growth momentum, but quite similar markets. Slightly, you know, as you can see my little arrow there of where Bendigo is in relation to Ballarat. You've just got that little extra 15 minutes on the train to get to Bendigo. But it was a very strong, it was rising property market. It has its own inherent strengths, good, strong links to Melbourne, but it doesn't rely on them. So, and that's key when we look at some of these regional cities, I think. Terry, wouldn't you agree?
Yeah, I think you've touched on a number of the key points of the sorts of places that will do well in this current situation and moving out of it. And Bendigo is a great example. Diversity in the economy and strength in those economic areas that are least likely to take a major hit in the situation. I mean,
that's right. And you know, and this is why we talk about obviously buying in fabulous growth areas, but really what that means is, at the end of the day, that's risk management. We are trying not to buy in areas that are volatile or have an oversupply of new properties, or are a one-horse town in terms of industry that might only be relying on tourism or agriculture or whatever it is, so that we are managing our risk. And when something like this happens, as I say, these kind of areas, they weather that storm because of those inherent strengths that they have. So population growth is fantastic in these areas, expected to reach 200,000 in a few years' time yet, but it's had that airport upgrade, the hospital upgrade, a number of major companies are based here. Lots and lots and lots going on. You'll see on the vacancy rate chart at the moment, very much has been holding steady for a good couple of years now. No major spike there yet. It's still sitting in April at 0.9%, which is under, it's 1%. It's great.
One of the factors that I'm sort of saying to people, what should you look for in a location that's going to do well in the situation and coming out of it? And one of them is the level of vacancy rates.
Yeah.
If you have a market where the vacancy rate is, or Bendigo currently is 0.9%, it means that vacancies could actually treble in Bendigo, and it would still have a vacancy rate below 3%. So it would still have an acceptable vacancy rate. And that's a concern to people because of the number of people who used to have their properties in Airbnb, etc., and now putting in a permanent rental pool. In some markets, rents are falling. But when your starting point is a vacancy rate that low, you can absorb that and still be pretty good.
Absolutely. And look, I mean, the growth charts, I don't think they'll be showing exactly what's, they lag, as I say, they lag a little bit. So while we will see that volume, you can just see the little green bar chart there, just a little bit of 2020 there. So without question, the sales volumes will be down, but you're not seeing that drop in that median house price, the big line going through that chart at the moment. So I think that there might be a leveling off of it. It will really come down to the types of properties that are being sold. But but again, these kind of diverse and very strong areas tend to be less volatile and less affected by things. And people still need to rent. They still need to have somewhere to live.
Very, very affordable, good rental yields, and the opportunity, as you and I both know, to find properties where you can value add. There are opportunities to find properties where you can
They are a little bit like hen's teeth now. People seem to have cottoned onto it, but yes, they are still out there.
Yeah,
and then I just wanted to give a couple of honourable mentions, as I'm calling them, in the Victorian markets. I found really that Melbourne was kind of, after its boom, Sydney had its boom, Melbourne had its boom, it was sort of in a bit of a holding pattern, but it was, and again, it will be and is experiencing major population growth. I think it's top of the country, isn't it, in terms of population growth? It's the nation's leader.
Very much so. I mean, the difference between Melbourne and Sydney is Sydney loses population big time to interstate migration, but it gains from overseas.
Yeah.
Whereas Melbourne gains from both those factors. And right now that's important because there's been a shutting down of, the whole international travel thing that was just that form.
Yeah, and I think, and that was also, the Sydney boom sent everyone running for more affordable places to live. So Brisbane benefited from that, so did Melbourne, so did Tasmania, quite frankly. So the honourable mentions really, I think, are, it sounds like I've really mentioned the whole of Melbourne and Victoria here, but they are all such good, strong, solid markets. When you look at the southeast and down towards the Cranbournes and Carrum Downs, the Casey City Council area, right across the bay, the other side, Wyndham, Werribee, Geelong, they're fabulous markets. The yields aren't great. They've all had pretty good growth, but the sales volumes were very steady, very stable. They were in a bit of a holding pattern. You've also got Melbourne's north, the west, so Epping towards the north, sunshine out west. Just really very, very solid fundamentals. Good again, local industries. There's access to job nodes. People have good transport options. It's hard not to find a great area there, really. So,
Okay.
we can come back to Victoria, Terry, if we need to.
Okay. Just before we move on there, we do have one of our viewers, listeners with their hand up, and just reiterating to people, we welcome your comments and your questions, which you can type into the chat panel. And if you'd like to ask your question live, you can put your hand up. So I'm just, Katie, I know you're there in the background, to bring Candice Lou, who has a hand up in live, to have a chat. What do I do? I think I can
made Candice live, so Candice, you can now ask your question.
Are you there, Candice?
Hello.
Hello, how are you?
Yeah, good. My question is really around Melbourne. Like, Melbourne North and East has been on the hotspot for some time, but I don't see any capital growth in the last 3 years that much.
Which areas in particular are you referring to?
Like, for instance, Frankston. Down, yeah. It's been very stable.
It has, love, but they had super growth, sort of I'd say maybe 3.5, 4 years ago. They were coming out; those outer areas were coming out of a major boom, especially Frankston. They had major capital growth, and the Cranbournes did too. So we sort of took a little bit of a break from buying down that way, just to let things calm down, which it kind of has done. So, and again, to me, it comes back to when things are in a holding pattern but ready to go again, that's what you want to buy. You don't want to be waiting for evidence that it has already grown, because you've missed that surge of that initial growth. So, because most markets pre this pandemic were just poised, things were poised, and because of that population growth around Melbourne, there's just a crush for property. I just think it's a good opportunity right now. You might not see any growth for the next six to 12 months, but it will definitely happen. You hold these things long term.
And if we're talking about locations like Frankston, there is some new infrastructure events happening that are going to help to boost that market, include new motorway link. But
you need to watch the yields down there as well, because they did have that. They did have all that growth, so the yields have not been great, but rents have kind of crept up a little bit steadier to make it a little bit more palatable. But it's something to be aware of in those areas. Right. Yields are not great.
So if I have to pick, say, Geelong and Melbourne East, same price point, which one would you say it's a good buy at this point in time?
Depends on it will also come down to the property type. So in Geelong, you're going to find a slightly older property. In the east, the southeast, you will find you're going to be able to more easily find something newer with better depreciation, perhaps less maintenance. So
right.
Look, I don't think there's much in it, to be honest. Growth wise, these kind of areas, when you average it out over 15 to 20 years, they come out very similar. So look at your personal sort of cash flow and property type questions. The demographic is similar. It's not dissimilar. They've both got good transport into Melbourne. They're both kind of self-contained. You don't have to go to Melbourne. Certainly from Casey, you actually don't have that many people that travel into Melbourne. I think slightly more do from Geelong. But I honestly don't think there's much in it. It's going to come down to property type, love, and what your
apropos that, Kate, Ross has sort of typed his question into the panel. In the outer suburbs of Melbourne, he's asking, would you prefer existing or new build, and that kind of speaks to the heart of what you're just commenting on, I think.
Well, it depends whether you mean new off the plan or new, it's been standing for 12 months. The last brick has been laid. We're not buying it off the plan. I'm not saying off the plan never works, but if you look at the land between that north end of Werribee and Melton, that's all one big, essentially that's all greenfield, right? That's one new housing estate coming after another. They're building thousands and thousands of homes there. Now they do need them, as we said, you know, Melbourne is growing exponentially. But I would always prefer to buy somewhere that has some existing infrastructure, that has a bit of history behind it, you know, rather than going into somewhere that it's going to take 5, 10, 15 years for the whole area to get to be developed. And in the meantime, you're competing with all those other new properties. So generally I prefer something that is established, but it can still be new. It can be newly established, if that makes sense. Not one of 5,000 new houses in somewhere where there's no schools. No, they're still building the roads.
And while we're on the topic, before we leave Victoria, there's another viewer asking the question, and I know this is a hot topic for both of us. Do you think the impact of the pandemic will drive more people to move to the regions of Victoria? And I think it's a question that speaks to a trend that's underway, but likely to be exacerbated by the pandemic shutdown.
What do you think?
I think absolutely yes. I think part of the reason why locations like Ballarat and Bendigo have done so well in other parts of regional Victoria, people have been realising that they don't actually need to be in the big cities. They can work remotely. They can work from home using technology. Yeah. That's been part of the driving force there. Yeah. The shutdown period has forced people to work from home, so I think more people are going to do it.
Oh, I haven't been doing this for years. Absolutely. I think this is a whole other webinar topic, Terry. the effect of in terms, I mean, commercial too, you know, when you think of the number of office buildings that are currently vacant because everybody is working from home, and we are making it work, and people and employers are realizing actually this could save me thousands. I agree. I think there's an element. There will always be people who will want to live where, I was going to say where the action is. There's plenty of action in Ballarat and Bendigo, let me tell you. But I think there will always be people who will prefer the city, the bigger city, but I definitely think it will have a positive impact in terms of population growth on the smaller, more regional cities. Yes, I agree. Yeah, so can we move on?
We can, and I'm aware, Edmund, that you have your hand up. We'll just go to a little bit more of
yes,
Kate Hill's presentation, then we'll come back to some of these questions, including yours, Edmund.
Yes, okay. And look, and it's a recurring theme, right? But Sunshine Coast, again, pre-COVID, very, very strong market. The economy, as we've said before, has been diversified. The industries have been diversifying there more and more over the past few years. Significant investment in the region with huge infrastructure projects. You've had that airport upgrade. I say you because I know you're up there. Airport upgrade, that new CBD being built, that huge, enormous medical precinct down at Bertinia, which it's a sight to be beheld. And as I alluded to previously, continuing population growth and also from interstate migration coming up. I personally know people who have moved up to the Sunshine Coast because there are jobs, it's affordable, there's a fabulous lifestyle. Why wouldn't you move up there? So it's, again, because of the Sydney boom and who can afford property here. So we have been buying there for a couple of years now. Vacancy rates really, you know, have been holding pretty steady. They are still under 3%. And those growth charts as yet, same as before. Sales volumes are down a little bit at the moment, but I'm not seeing any significant drops in value there at all. Love this market for many reasons.
And one of the criteria that we're certainly applying to the question of which markets are going to do well coming out of this is just what's the infrastructure spend, and there's very few places anywhere in Australia, including capital cities, with such a big spend on infrastructure, over $20 billion underway in various forms: the medical precinct, the upgrade of the airport to international status, the subsea cable with interlink links, the fastest from the east coast of Australia to Asia, etc. What's happening?
What's not to love? Love this market. Honourable mentions in Queensland, Moreton Bay. I know I'm a broken record, but you just can't go past it. Hugely diversified population. They are increasing. The council's been working so hard at increasing local employment opportunities, so not everyone's on the train. I should say, personally, we have seen a housing shortage there already for the past 9 to 12 months, and certainly a drop in the number of people selling their homes. It's been quite tricky getting into that market there. It's very popular with owner-occupiers. The yields are great. Love that market. And Brisbane's inner north, I think, is also worth a mention, especially when you consider the migrants, not just migrants, but people. It's very affordable there comparatively, being quite close to the city and those big employment nodes of the port, the airport, the CBD. I think, and improved transport options, and the Queensland government spending a lot of money on improving Brisbane's infrastructure.
Yeah, and I'll just add to the Moreton Bay local government area in the north. Speaking of infrastructure, a new university campus, and once we get back to some kind of normal, that's going to be a driver.
I mean, just look at the car park. When you sit on the train and you go past, you come out, from Petrie Station, and you go up the car parks that they're building there are, again, quite the sight to be beheld. You're like, wow, that's a big car park.
Yes, no, it's going to be a huge factor in driving demand in that market.
Yes. Okay. Stow, any Queensland questions, or shall I move?
Well, I'll just have a look through. Tanya is asking for our thoughts on Toowoomba. Do you?
I love a bit of Toowoomba. Maybe not right now. Toowoomba is one of those cities that benefits from the resource industry without being dependent on it. So in itself, it has, like Orange, I'd say a bit like Orange. Where you've got in Orange, you've got the gold mine. Is it Newcastle? You've got the gold mine. It benefits from it, but it's not dependent on it. So Toowoomba has it's been in the doldrums a bit. I haven't really seen it move. I'm not seeing massive signs of it doing anything anytime soon. But I don't mind it. I don't mind it. But I think there are better opportunities elsewhere at the moment.
Yeah, I think you're right. Toowoomba is one to keep an eye on for all sorts of reasons. It's a very important regional city, very solid, diversified. I think the thing that's going to take it to another level, and it's coming, is the inland rail link, because basically it's linking Melbourne to Brisbane with Toowoomba is pretty much the pivotal point in Queensland for that piece of infrastructure, and there's key locations along the route. And this project's already underway. It's not just being talked about; it's happening. Toowoomba's going to get a big lift from that when it finally is starting to happen.
Yes.
And there's a couple of questions from Anne and also Kareen asking our thoughts on the Springfield area on the edge of Brisbane metropolitan area.
Don't mind that either. It's that whole corridor really I always visualize Google Maps in my head. So that whole corridor, as you move, from the Gold Coast, and you come up that highway that's now 4 lanes each way, and you come up towards Mount Warren Park and into Logan, and that whole section across the south towards Springfield and Redbank Plains and Ipswich has been, every time I've been there in the past few years, it has just been one massive construction site. There is something going on there all the time. If it's not widening of roads, it's new roads. the number of the most enormous warehousing that you've seen, it's extraordinary. There are big warehousing employers, logistics people are basing themselves there, and Springfield is right next door.
Yeah.
And it's actually, and it's very, sorry, I'll pause for breath, Terry, go.
No, I agree with what you're saying. I think a simple formula to look for people is, people want to buy affordably, as to where they work. And this area we're talking about is massive jobs nodes, and that they're continually increasing. Big new enterprises are opening up there. The land is cheap, the road and rail connections are good, so industry goes there, and you can buy very affordably close to those big jobs nodes, and Springfield is at the heart of that, with all the infrastructure that it has, including a university campus and a private school, and now rail links right to the centre.
Right down there, exactly. So it is when you compare it with some of the surrounding suburbs, it's slightly on the pricier side. It actually depends where in Springfield exactly you buy, but it's I rate it highly, and the yields are great as well. Yeah. So, and I would much prefer, comes back to that, the question we had earlier on about new, established or new. I would much prefer to buy somewhere like Springfield than, somewhere in, those new suburbs that are being built a little bit closer into Ipswich, where that is new build, and not a lot. There's still, it's still all being constructed, et cetera, and marketed a lot to interstate investors. So I prefer the Springfield area, where you're still buying newish, to those newer areas. Right.
We've actually got quite a few more questions on Brisbane and Queensland. We'll probably move on, and we perhaps can come back to those at the end if there's time.
No, me.
Yeah. I'll just quickly touch on one. Michael, your questions about what the Gladstone market's doing now. We're actually starting to see uplift in Gladstone. I know it's been like 6 really tough years, but rents are actually rising right now in Gladstone. It's one of those central Queensland locations whereas the theme across the country perhaps is that rents are falling because of the various factors.
No, and Emerald as well. So some of those other sort of inland.
Actually, Mackay, Rockhampton, the Whitsundays, and now Gladstone rents are rising, and partly it's because the resources sector in central Queensland is actually travelling very well. New jobs being created, and people are living in those places and either fly in, fly out, drive in, drive out to their jobs. So Gladstone's actually on the way back, I think.
I agree. Yes, definitely improving. The vacancy rates are down, and consequently, rate, as you say, the rents are going up. Yeah, and that's happening in some of those other areas too. Okay.
So let's talk about Adelaide.
Let's talk about Adelaide. Oh my God, the quiets. They're just, we say this every time, don't we? The most underrated property market in Australia. I do not understand why. It just keeps performing. It's consistent. The yields are good. I just, yeah. Broken record. The city of Marion, it's south of the CBD. And you look at what's billions being spent in infrastructure, both private and government investment. You've got major transport projects. The properties, again, are affordable. It depends on where you're buying. Some of those suburbs, you're going to find something slightly older. And by older, I mean like maybe 15, 20 years old, rather than, 4 or 5 years old. But this is a very, very popular area with owner occupiers because of proximity to different jobs nodes, and look at that great big blue thing that you're not far away from, which admittedly it's freezing. It's Adelaide, but it's there nevertheless. So lifestyle, affordable property, jobs, it's consistent performer. This, when you look at the growth charts of all the suburbs in this area, they are, what is not to love about them? It keeps going up, and the yields are great. And there's more to come. So very stable, and diversified industries, as I keep saying. It's so important.
a big university campus right next to a really big medical precinct, including both public and private hospitals, and the Tonsley Innovation Precinct, which speaks to the heart of one of the things that excites me most about Adelaide. It's the Silicon Valley of Australia. Not many people realise it. It's the high-tech innovation capital of the country by far. And major enterprises, both national and international, headquarter themselves in Adelaide for that reason. And one of the things we've learned in this virus shutdown period is how important technology is.
Yeah.
And some of the enterprises that are actually booming in this phase of actually being, well, Zoom, for example, which is the medium by which we're having this conversation today.
Yeah.
Adelaide, and particularly Marion, very well placed to come out of this phase looking pretty good.
Yes, very much so. Honourable mentions.
Kate, just before we leave, Marion, Aaron's asking a question. What are your thoughts on Raynella and or Hallett Cove,
Right.
which are part of that
Yeah.
area that we're talking about?
Great. Absolutely. The end. Don't need to say anymore. Really like them. Yeah. My next slide actually says, I've found it hard to find an area in Adelaide that is not performing at the moment, really, that isn't, you know, on some sort of upward trajectory. Some better than others, absolutely, but I think you're going to have to try pretty hard to get it wrong, honestly. That's a big call to make, I know. But every, you know, whichever area I think about in my head, be it, you know, Port Adelaide and that Enfield precinct, that Salisbury, the Playford City Council area, the Onkaparinga Shire a bit further south of Marion, everything, the Adelaide Hills, all of them are on an upward trajectory.
Yeah, and we've got a question from Graham, our thoughts on the Salisbury area, and Rowan asking our thoughts on Modbury North and Ingle Farm. So we're talking up in those northern suburbs, which you know very well.
Yeah, love them. Again, affordable. Modbury, again, Ingle Farm, slightly older properties. Again, you just need to know kind of what you're getting into there. But good sized blocks. Salisbury, have loved it forever. You know, very established suburb, leafy, again, very, very affordable. You're buying 4-bedroom houses. I mean, 3 bedrooms are the most common property type there, but you can get a 3 or a 4, a newer style 4-bedroom property there in the mid 300s. So on a, you know, on a reasonable block size. So, and you're in town in 20 minutes.
And yeah, I mean, incredibly affordable. The rental yields are very good. You can, you know, to buy in a capital city where you're getting a rental yield for houses above, say, 6% from the get-go is exceptional.
Yeah.
And for me, the biggest thing about those areas is the proximity to really big jobs nodes. The Edinburgh Defence Precinct, the big industrial, it's you know, massive employer.
You're in town in 20 minutes if you need to. Very much so. Yeah. Yeah, I love it. Yes, and that is a great thing really about Adelaide in general. You're never very far away from that, as you say, those sort of job nodes or something going on. So yeah.
And Sandeep's asking particularly about the Elizabeth area. I think there's 8 suburbs with Elizabeth in the name.
Yeah.
And I think my feeling is you do need to be careful about where you buy in those areas because there's some pretty down market ones. Down market's okay too, but you need to be careful about where you're buying and what you're buying.
You do. I mean, I to be honest, I'd say that about most areas, but that is, it does have a bit of a reputation, you know, so some of it justified, some of it not. Again, they have, you know, when you read the City of Playford's, you know, their planning documents for the next 20, 30 years, you know, what they've got going on is, again, billions being spent up there. You have got state-of-the-art shopping centres, medical centres, hospitals, but as you say, you know, but there are some suburbs that you want to be careful of. You can literally cross the street and think, oh my God, you know, have I come into a different universe? Or just cross the highway and you're in a completely different suburb. But I like it up there too, very much. And the yields up there are actually slightly better than they are in Salisbury. Yeah. So, and again, you're going to find something a little bit newer up there. Very affordable, you know, big with homeowners as well, because it's so affordable. And the number of schools that they're building up there, well, you know, we could spend all day just talking about Northern Adelaide.
Kate, Abby's had Abby Singler they've had their hand up for a while. Perhaps Katie, we could unmute Abby and have a quick chat before we move on to Kate's next slide.
Poor Abby.
Hey, Katie, can you hear me?
Yes, we can. Go ahead.
Terry, thanks for valuable inputs. Katie, thanks for your valuable comments. Look, I'm an investor myself, and I've been looking for investment property for last couple of months, and my budget is around 500 to 550K. And I think the areas which you mentioned, I was a bit confused because I was looking in Moreton Bay in Murrayfield, and I was looking a property in Bendigo as well, and I start looking in Sunshine Coast as well, right? So at the moment, I'm looking for a long-term growth and good rental income. So I was a bit confused, like if I have to choose one area amongst these three, which area, as per your expertise, should be a better area for long-term investment?
If you're comfortable spending 5 to 550, then
Yes.
I would do that in the Sunshine Coast. I wouldn't be spending 550 in Bendigo. I wouldn't be spending 550 in Moreton Bay either, quite frankly.
And
You'd be overspending a little bit for the area. So always think about, when you look at median house prices, are obviously interesting. You know, it means that's that middle point. So half the properties are selling for less, that half of them are selling for more than that. But if you look at a standard sort of property in Bendigo, if you're spending 550, then that's a lot of money to spend in that area. And if you need a reasonable yield, you're narrowing the number of people who are going to be prepared to pay that in that market, right?
Yeah.
So, but that's going to be relative. It'd be like spending, you know, like 500,000 in Northern Adelaide, you know, if you can find anything for 500,000 in Northern Adelaide, but you're going to be buying, you know, right at the top end of the market rather than where most people are renting, if you like, buying and renting. So, and you don't want to narrow that market down. So if you're comfortable spending 5 to 550, I would absolutely do it in the Sunshine Coast, because that's kind of the average amount that you would need to spend for a decent home. And you'll get 520, 530 a week rent for it in that area. Yeah.
Maybe the last question, because that 500, 550 is my maximum budget. I don't mind spending less, but my long-term goal is to have since it's investment property, so I'm looking for a long-term growth as well. So in terms of growth, which market will suggest?
Well, Avi, this I don't know what this is going to sound like, but all the areas that I talk about have long-term growth. There's nothing that we talk about that is a flash in the pan is only going to be good for the next 3 months. Everything that I look at when I'm buying property for people, I want to, you know, in 15 years, they're still holding that property and it's still performing and it's still performing for them, right? So everything that we talk about is geared towards long-term growth. So if you're looking at Bendigo, Moreton Bay, Sunshine Coast, you're pretty much, in my mind, picking in that price point some of the top 3 areas in the country. Pick any one of those and you will get really good long-term growth. You might not get it at the same time. That's the difference, right? So Bendigo will have different growth cycles to Moreton Bay and to the Sunshine Coast. So as long as you know, but as you say, you're looking for something long-term. So as long as you're not watching it every month, it'll be fine, honestly. Yeah. If you want to spend, say, 450, I'd do it in Moreton Bay. Again, and the yields are quite similar. You might find the yields are going to be similar in Bendigo as they are to Moreton Bay. You'll probably also, you might find a slightly newer property in Bendigo than you will in Moreton Bay for that price.
Yeah.
And in the Sunshine Coast, you'll possibly find something a little bit newer still with the same yield. I think your cash flow will probably come out a little bit better in the Sunshine Coast.
Okay. Thanks very much, Katie. Thanks for your reply. Really appreciate it.
Thanks for your question, Abby. Back to your presentation, Katie, and I'll just say to Glenn, who's mentioned a couple of times, please allow time for Perth. I think it's your intention, isn't it, Kate, to
Totally.
touch on Perth. So hang on there, Glenn. We'll get to it shortly.
I know. Right. Steaming through. Sydney. Yay. Okay. I think there are real opportunities here. I'm sitting here, that's why I've said here. population growth was a factor. Yes, not as good as Melbourne, but it was still happening. Infrastructure is off the charts, and specifically, if you want to kind of have a bit more of a look at this slide, then we do put these presentations and talks up on YouTube, don't we, Terry? So come back to this, because I'm just going to click on the next slide, because specifically I want to talk about this area, which is that Liverpool Blacktown area, which is obviously circling around our new airport that's coming at Badgerys Creek. Not that we have a single plane taking off at the moment, but short-term thing. So Badgerys Creek in the city of Liverpool, and look, also Blacktown. There's really, again, there's not much in it. You're going to pay a bit more in the Blacktown city area than you are in Liverpool. But the level of infrastructure spending here is, all I can say is off the charts with the stuff that is going on here. Billions and billions and billions are being spent, obviously, on the airport, on roads. The population growth here is consistently above national average. It's affordable. The yields aren't too bad. And today, just this morning, our Premier has announced that in Mount Druitt, they are also spending billions. They're revamping the whole of the city centre there. Construction jobs, about 15,000 new jobs are going to be created all in all eventually. So the government here are very much, they've been fast tracking planning applications to get things obviously approved and get the green light so that they are, they're getting people back to work. Yeah, this has got to be, again, one of my top areas in the country.
So that's Mount Druitt you're referring to there, that new announcement, which is part of the Blacktown area. Just on the top of the map, if people can see it on the screen there.
Just snuck in there, Mount Druitt. Again, it's we were talking about the Elizabeths. You know, from anyone listening from over that way, it doesn't have the best reputation around here, but it is being, you know, those areas are often the ones to watch especially when they get a surge and a boost like they have this morning. You know, because those areas don't go away, and they improve, they grow, they have often phenomenal growth. For those kind of reasons. So honourable mentions in New South Wales will be Newcastle. Again, it's a long term, it's a steady performer, strong economy in its own right, obviously has its proximity to Sydney, but again, the growth charts there are fabulous, you know. Very, very stable market. Orange and Albury-Wodonga, I know are close to your heart too, Terry. Both really poised and entering growth phases. Vacancy rates have been trending down significantly since sort of 2014 highs. Lovely steady growth charts. Diverse economies. I think the ATO's based in Albury, isn't it? They're going to be single-handedly keeping the coffee shop owners I think busy, given how busy they are at the moment. But really great regional cities and great regional markets as well.
Yeah. And Michael specifically asking, what do we think about Albury-Wodonga? I actually did a specific webinar on Albury-Wodonga last week, and I was reminded, just refreshing my memory about the features of Albury-Wodonga. The four biggest employment sectors in Albury-Wodonga are hospitals and medical services, supermarkets and food stores, the defence industry, because there's big army presence there, and aged care. And I thought, well, what better sectors to have your economy based on right now in the midst of all of this pandemic schmozzle than those four sectors. And that's Albury-Wodonga, incredibly stable in terms of employment, very affordable, great rental yields, and it's a great place to look if you're looking for that opportunity to buy a house on a block of land where you can subdivide and maybe build something extra.
They are building a lot in Wodonga too, I would say, to that. I know they've got big plans to kind of double in size, haven't they? But yes, agreed. And the yields are good too, aren't they? And it's a bit of a tourist hotspot. They've got that going for it too.
But when we get beyond this current schmozzle, yes.
Yes. Okay. I'm afraid Perth does get just the one slide, love, but because it was, Oh, look, it was definitely, it spent sort of 2 years, I think, flatlining and hitting rock bottom. And there were most definitely signs that things were improving. I have very cheekily referenced a talk that Terry and I did. Please go and find it on YouTube. If you just put that in, the best hotspots, where should you invest in 2018? And from minute 50, I looked it up yesterday, from if you forward wind to minute 59 and 50 seconds, that is when you and I start spending the next half an hour talking about Perth, because we actually both were there at the same time, strangely. Do you remember?
Yes,
and,
I do.
And we were both, very impressed with what was going on. And this, to me, in terms of the pandemic hitting, I feel that it's very much hit that pause button. I don't see it heading back. Why would it? I really just think it was trying to give it a go, and it was improving, and this has hit and it's gone, oh, okay, a little bit of a breather, wait for this to go, and it'll go on again. So yeah. When you look at those suburbs, like I've mentioned here, and that we talked about others in that webinar too, but specifically Stirling, Joondalup and so Stirling, these are actually, all three of them are sort of almost one on top of the other, not quite. Stirling, the city of Stirling, is the one closest to Perth CBD. I love that area. When you think about how close you are to the action in Perth and what you have to spend there and the yields that you get, yes, slightly older property, but a great block of land in such an awesome location, Cottesloe Beach, 10 minutes that way. I just think there are really awesome opportunities there. But again, be aware of the risk. We haven't come out of the woods completely. Vacancy rates were definitely trending down. As I said, I've said this for a couple of years now, the commercial vacancy rates have been coming down. But their infrastructure spending as well is off the charts with what the Perth government's doing.
Yeah, I think Perth was undoubtedly on the way back as we entered this period. Sales activity was rising, vacancies were now down to very acceptable levels, rents were rising, and the state economy is improving. Now, I think as we come out of this, I think Perth property is going to do well because the Western Australian economy is going to do well because of the importance of the resources sector, which has been very solid during this period of shutdown. But I think we're going to have a resources boom on the other side of it.
You heard it here, people. You heard it here. Yes.
Well, I don't think that's even a brave statement. I think it's a certainty. As the world recovers, including important countries like China and India, their demand for iron ore and other resources from Australia will rise strongly, and the Perth property market is going to get the benefit from that. So I think now's a good time to look because prices are down. Great opportunity to look and buy well in Perth at the moment.
One thing I will say about, I guess, WA is I would, at this stage, I'm just going to put it out there, I'll make a call on it, I would stick to Perth. I wouldn't head too far out.
No.
Why would you, if you know what I mean? No offense to, I'm sure it's lovely in all those other areas, but I would kind of, when I say get as close in as possible for what you can afford, that's kind of what I would do. I wouldn't head too far north or south because that's the only way you can go there before you hit the desert if you head east. Yeah. So, when you look at other markets, or even Mandurah out that way, I would stick to the more Perth suburbs. Yeah.
And so would I. Yeah. Agree with that.
Yes. So, there we go. Call to action. We'll come back to questions. Let me just say this before, in case anyone has to dash off, because obviously we've run over because it's me. $500 discount off the full standard investment property buyer service if you sign up with us for your buyer's agent service and you mention that fabulous code word Hotspotting. And please do, if you've enjoyed listening, follow us, me, YouTube, Facebook, Instagram, where I do have a lot to say for myself. So, okay.
Okay. Well, we are a little bit over, but let's deal with a few more questions before we wrap it up because it's always fun. Wayne, you're asked about Wagga Wagga. It's just Wagga Wagga is one of those regional centres, one of many around Australia that I like a lot. Very solid. What do you think of it, Kate?
Very affordable. You've got freight hubs. I think there's defence projects going on there. You've got expansion of university, hospital upgrade. Depends on how much you've got to spend. Again, sorry, you know, if you are in that sort of, I don't know, look, under 300-ish, I think there are worse things you could do.
Yeah. Okay. One thing we've noticed, Kate, is that there's been some considerable price uplift in Wagga Wagga in the last 12 months. Something is going on there, and I think it's one of those places where the economy is diverse. It's got a very strong defence economy, both an Air Force base and an Army base. It's surrounded by very important agricultural areas, and you know, agriculture is one of those sectors which are doing okay because of demand from supermarkets, and as we come out of the shutdown phase, I think agriculture and viticulture, you know, wineries are going to do very well. Look, that's a combination to look for, I think, and Orange is one of those places that has that.
Yeah, pandemic, yes, and you know, pandemic effect. Can't deny it.
I think you touched on Newcastle. David is asking where do you like it in Newcastle? Which suburbs? Anywhere in particular stand out for you?
I do not the posh seaside suburbs, but more sort of in you know, inland a bit. If you can find a decent look, it's got great development and reno potential around there as well. But if you're looking in the area around sort of that Mayfield-y kind of area, as you move towards, you know, the big hospital, the uni, and you're on the road out to the rest of the Hunter Valley, I kind of like it there. It's just generally just that little bit more affordable. And again, depends on your, you know, your personal risk profile, what kind of cash flow you're looking for. But when you're looking at a slightly older property that could maybe be renovated, put a granny flat on the back, you know, kind of thing, that's very doable. Very doable. Yeah.
I do. I like the Hunter Valley because when we think about the industry sectors we think are doing quite well and will do well as we come out of the shutdown phase, Hunter Valley is about agriculture, wineries, you know, the horse industry and the resources sector and power generation. So they're all
but also, sorry, but also, you know, look at how Newcastle has reinvented itself, you know, post BP, or was it Rio Tinto? Whoever it was, sorry. In terms of the newer technologies, you know, and that artsy scene that it's got going on. So those are, I think those are industry sectors, as you've alluded to earlier on, not to be underestimated as we, you know, move forward into the next sort of 10, 20 years.
Okay. Andrew's asking, do you have an opinion on any areas in Canberra? We don't talk about Canberra much, do we?
No, do we? You love Canberra. You go on.
Look, I think
expensive, that's what I'm going to say.
Canberra's in competition with Adelaide as the most consistent capital city in the country and the most underrated one. It's quite an expensive place to buy. That's the thing that needs to be said, but it's incredibly consistent because it's got an unfair advantage. It's the capital city, it's the government city, and because of all that, it's a place where it's going to ride out this sort of virus crisis better than most. But when I think of Canberra, I actually tend to think more of places just across the border in New South Wales, but actually 15 minutes drive from the centre of Canberra. Those places just over the border where they can actually access some of the help for first-home buyers that are available in New South Wales. Cheaper than many of the suburbs of Canberra, but really just sort of 15 or 20 minutes drive to the absolute heart of Canberra. So those are the places that I'd be targeting as an investor. Yeah. We might just take one or two more and then we should wrap up because we're going a bit over time, but we usually do. Let's see. As we flip, we've handled those. I think we've actually dealt with a lot of the questions that people, there's actually quite a few further follow-up questions about Adelaide, when it's good to see interest in Adelaide. Around, say, Christie Downs, they've owned property there for a while. It hasn't shown a lot of growth. Do we have some hope for that area? That's not too far from Marion, is it?
I'm so sorry. I was so busy going, yes, please be interested in Adelaide, that I didn't hear the area that you were talking about.
Christie Downs.
Yeah, same. It's down the Raynella way. It's all part of, you know, the City of Marion, Onkaparinga Shire. Love it, love it, love it.
Yeah. Yeah, I think it's going to do better, Miriam, going forward. I think Adelaide generally is going to do better. It's got, you know, that high-tech innovation thing is going to be very important, and also the submarine contracts are absolutely massive, $90 billion worth over time. I think that's going to be very important. Look, I think it's probably time for us to wrap up. We've been going about an hour and 10 minutes, so a little bit over time, but it's all been great information, and thank you all for your questions. And there's been also a number of comments. Sandeep says he's going to listen to the whole thing again when he gets the recording because it's been absolute gold. Thank you for that, Sandeep. We didn't actually deal specifically with your questions, but you were asking questions about areas of Adelaide that we have covered during the conversation.
And do look, you know, if you put into YouTube Terry Ryder and Kate Hill, you will see a number of these talks where we talk probably a bit more specifically about some of the areas that we've mentioned today as well.
John says this is one of the few meetings that I love to have go over time, so thank you for that comment, John, and for your thanks. Karina says, thanks, Kate and Terry, that was wonderful. Lots of comments like that, so we really appreciate it. It's great to get that interaction, great to get your questions. We haven't dealt with all of them. We've dealt with quite a good percentage of them, and I think it's been a great conversation. I could go on for longer. I know, Kate, you could go on for longer, but people are in their lunch breaks probably and need to get back to whatever they were doing, including work, some of us. So we should wrap up. Thank you, Kate Hill. I always love doing a webinar with you because it's always interesting. It's always well researched. We seem to agree on most things, so that makes it easy as well. But the interaction we've had today from a large audience indicates that people are finding it useful and interesting. If you've got further questions or you'd like to follow up, Kate Hill's contact details are on the screen. Please follow up if you've got further questions or would like to avail yourself of her buyer's agency services. So that's probably a good point to wrap up. Kate, would you like to say something in parting?
I would like everyone to stay very safe and stay very well, and please stay resilient, and please ignore most of what you read in the media about the property markets. Ask Terry or ask me what is actually going on out there. But most importantly, stay safe and stay well.
And I'd like to reiterate that. Ignore the media, do proper research, talk to real experts, and I highly recommend a conversation one-on-one with Kate Hill from Adviseable and her colleague Alex Dutt as well. So thank you, Kate. Thank you, everyone. Terry Ryder from Hotspotting signing off. Let's do it again soon.
Bye.